Bob Schiller, good to see you here in Davos at the WEF 2011. What's your outlook? How do you see the global economy for this year, 2011?
Well, it seems to be recovering nicely by most indicators, but they're not all indicators are positive. And notably, in the U.S. and Europe, it's a little bit of slowness for people to get hired. Of course, there's the European debt crisis, which threatens to break up. I'm starting to sound pessimistic, I'm sorry. But I do have a pessimistic side. I'm worried also about real estate prices falling further and possibly disrupting the sense of optimism that we have right now.
What about the BRIC story? Everybody is very optimistic about the ongoing BRIC engine for the global growth. Do you believe in the BRIC countries still, or are you skeptical regarding, for instance, the Chinese growth?
Well, I think that the Chinese growth has been pretty consistent now for close to 30 years, and so something fundamental is happening there. More fundamental, I think, than this financial crisis. The way I view it, it seems like there's been an important step forward in world economic enlightenment, that people now appreciate more than they did the importance of entrepreneurship and free markets, and policies now are more consistent with that. And that's the ultimate reason why it's not just the BRIC countries. It seems like economic growth is up over the whole world, all of the developing world. And I don't think that this financial crisis is revealing any long-run flaws in that. It's just what happens when you're... the same countries that have financial crises also prosper in the long run.
And what about your home country? How do you see the future trend for the U.S. housing market right now?
Well, we produce data. The S&P Case-Shiller home price indices have been down now for several months. Partly that's seasonal, but it doesn't seem to be entirely that. The latest number, the November numbers, which we just announced, were also down, but not as much. So it's kind of a mixed picture. I worry that the downtrend may continue. We may have a double dip in housing, in the sense that we could get lower in prices than we were at the bottom in spring of 2009. That looks, we're right on the edge of doing that. I am worried that the home prices will continue down. There's a lot of abnormal behavior in these markets, a lot of foreclosures. I think that the bubble psychology has been defeated, and that psychology is not likely to come back, except maybe in isolated places that are very bubbly, like California.
And what do you expect from the Fed for this year? We have the QE2, maybe we will get a QE3. What do you expect from the Federal Reserve?
I think that's likely, because I think that the recovery, so far, we've had a nice recovery, but it hasn't been fast enough to create enough jobs. So we still have over 9% unemployment. And this recession looks different from any prior recession in the slowness of unemployment to come down. And now if you listen to President Obama's State of the Union address, that was focused on jobs. He comes out right at the beginning talking about jobs. I think that there's a sore point, that people are thinking that the U.S. land of opportunity is not such a land of opportunity now, because the jobs aren't there. Immigration has fallen. People don't come to the U.S. looking for jobs anymore. Well, some of them do, but much less. And that seems to me, it has to be addressed. And Obama is talking about cutting expenditures and holding... it seems like monetary policy will have to bear the burden of stimulus.
You mentioned double dip for the housing market. Do you expect also a double dip again for the overall economy for the U.S.?
Well, I think it's a possibility. The historical data says that those things are very rare. The only real double dip the U.S. ever had since the World War II was in the early 80s. It's only happened once. So I've been saying that I worry about a double dip, and I'm going out a bit on a limb to predict something that hardly ever happens. I still think it is possible, though, because the weakness in the housing market the housing market is central to what's been happening, and if prices really go down substantially again, it's going to create more distress.
Thank you very much, Bob, and have good talks and good meetings here in Davos. Thank you very much for talking to you. Thanks.